1st, 2024, and it is Easter Sunday. So I want to wish everybody a very blessed and happy Easter for all of those who celebrate. It's been a great weekend. Particularly, it's been a long weekend, right? Friday, the equity market and fixed income markets were closed in observance of Good Friday. So we've had a pretty nice 3-day weekend here, and it was a picture-perfect Easter Sunday in the city. People were out. It was perfect weather. It was about 60 degrees, bright sunshine all day. So you really couldn't have asked for a better day today. But it is back to reality because tomorrow is April 1st. But not only is it April 1st, it is Q2. Yes, that's correct. Tomorrow is the official start of Q2. For the U.S. stock market, both the S&P 500 and the Dow Jones Industrial Average closing almost at near record highs to conclude Q1. One of the best Q1s in stock market history. And it seems like the economy and the market is firing on all cylinders. Now, will this continue over to Q2? Let's talk about it, see what happens. Now, before we get started and jumping right into the news here, let's go ahead and check out the futures market because that just opened about 30 minutes ago here. We'll take a look at the S&P 500 E-mini futures contract. Trades under the ticker symbol ES. We're up about 20 points. S&P is trading at 5,329 in after hours trading. We'll check out the Dow 30, ticker symbol YM. We're up about 140 points. The Dow Jones Industrial Average ringing the register over 40,000. Wow, 40,316 for the Dow Jones Industrial Average. Last but not least, we'll check out ticker symbol NQ, which is the NASDAQ 100. We're up about 119 points on the tech-heavy NASDAQ 100, trading at 18,594. Now, if you look at the DJI, which is the Dow 30, the cash market, we are not yet over 40,000. We're at 39,807. That's the futures. But I am fully expecting 40,000 on the Dow, probably this week, maybe next week. We'll see. We're a stone's throw away. Now, we've talked about this market broadening out here in a major way. And if you've read the newsletter that we sent out on Thursday, we pretty much went line item by line item, breaking down all the different sectors as this market is starting to rotate out of the Magnificent Seven names and into some of the other sectors, particularly the Russell 2000. If you want to look at the ETF for the Russell, the ticker symbol is IWM. We're starting to break out of that base, breaking over 211, and this is very, very good news. Now, there's a few reasons for this, right? Now, again, read the newsletter because it kind of goes into a little bit more detail, but small cap companies are very indebted. Okay, they have very, very large debt balances, and the majority of that debt is floating rate. So as we look out into 2024, the Federal Reserve is expecting about 3 rate cuts. Now, why does that help small caps? Well, it helps them with debt servicing, right? So if you have interest rates coming down, right, that's going to be a little bit better environment for companies that have a large debt load, because as interest rates go up, it makes debt servicing a little bit more cumbersome and more expensive. As rates kind of cool and come down, that will definitely help things out, particularly companies looking to take on new debt. So I think we could all agree that this tightening cycle has come to a conclusion. The only question is, do we hover around this 5.25% to 5.5% range for some time, or do we come down in June? That is when the CME futures market is pricing in the first Fed rate cut. Financials are also leading into new all-time record highs. If you look at the ticker symbol XLF, that is the Spider Select Financial Sector Fund, breaking out almost into new all-time record highs. I want to take you behind the desk here just to give you a visual, because I think this is very, very important. So this is a visual chart on a monthly time frame of the XLF going pretty much back to inception, right? This is the crash of 2008. It's quite obvious why banking and financial stocks cratered in '08, but we've been on this steady uptrend here, and this is us. This is price action right here. We are breaking out of this base into new all-time record highs. Financials are doing well. Major investment banks in terms of the bulge bracket and boutique investment banks doing spectacular. Private equity's coming back, which means deal flow on Wall Street is returning, my friends, both from an M&A perspective, mergers and acquisitions, and IPOs. That's going to do really, really well for the market. You see stocks like JP Morgan Chase reaching new all-time record highs. Evercore, Houlihan Lokey, Citigroup, Bank of America, Wells Fargo, Morgan Stanley, all performing absolutely phenomenal. Goldman Sachs as well. And then last but not least, we need to talk about the energy sector. Yes, that is correct. Energy is firing on all cylinders. You have Chevron, Occidental Petroleum, ExxonMobil, all leading into 52-week and all-time record highs, helped by a rally in crude oil. I'll take you behind the desk again to check out the monthly chart of the XLE. We've been forming about a year-and-a-half handle here on the XLE. This is probably going to break out into brand new all-time record highs. We have a price target of 120 on the XLE before the end of the year. We'll probably hit that over the summer. And that's really all I got for you guys. So if you're new here, feel free to subscribe to the channel, leave a like on the video if you've enjoyed it so far, and if you want to receive all of our equity research for free, every other Thursday we send it out on our Substack to all Walks and Wall Street subscribers. You just have to scan the QR code on your screen, punch in your email, or just type !news, NEWS, in the chat, and the Nightbot will drop the link to our Substack. We have over 2 years of archived research in there, and this is just a glimpse of what the newsletter looks like. Again, we talked about gold, commodities ringing the register into new highs off of massive government spending bills, which will never end, and the housing market is rocking too, with the home builders leading into record highs. All right, everybody, I'm going to go ahead and close up the laptop here. I'll say hello to everybody in the chat, but just one more time, I want to wish everybody a very happy Easter. God bless all of you, for those of you who celebrate, and if you don't celebrate, still God bless you, because why not? All right, give me a minute and we'll get started. All right, let me clip on the microphone. It's finally a nice night out. I think the wind died down a little bit too. We are currently reporting live right outside of the GM building. Across the street is the gorgeous Plaza Hotel as always. And then right here is the Sherry Netherland Hotel. Reminds me of one of my favorite books of all time about trading, Reminiscences of a Stock Operator. So I'll go ahead and get the QR code off the screen and we'll get started, everybody. I see Cindy Foley. What is going on? Thank you so much for joining us. Richard Vogel, Al Baker, Old Wise Owl, Shannon Hal T, Jesus is here, Clara, Travel BC, John, Mr. 007, Pedro Luis. Says, hey Tom, greetings from Brazil. Thanks so much for joining us. Troy Atman is here. What's up, Troy? See all of our moderators. We pretty much have a full house very, very early. So what's going on? Peter says tomorrow is April Fool's Day. What's going on? Josh S. RB says, hey Tom and team. UniJ23. Mohammed is in the house from Egypt. Mohammed Youssef. Welcome, sir. Thank you so much for joining us. You know, that's a place that's on my bucket list to visit. Before I die, I really want to go to Egypt. And I want to see the pyramids. I think Egypt is such a wonderful place, and hopefully I can visit there sometime. It's on the bucket list, everybody. It's on the bucket list. All right, we're outside of the Apple Store here. You can still see the Vision Pro logo on the front. A Collector's Dream says, hey Tom, here from Miami. Using People. What's up? Always a pleasure. and Creative Mistress. Justin says tomorrow is the first trading day of Q2. Let's go. Absolutely. Yeah, quarter two is here upon us, everybody, which is quite unbelievable. I mean, I remember the beginning of Q1. It seems like we were just doing this live stream on New Year's Eve, all but a couple days ago, and now we are headed into spring. So happy spring, happy April 1st. And I guess we'll get right into the news. We did a little bit of a recap of kind of what we've already seen on Wall Street. But again, if I could summarize next week into a few words, it would be Fed presidents. Okay, we are going to hear from a slew of Fed presidents giving their outlook on monetary policy, but also we are going to get some very, very key economic data. Let's actually start by walking directly down Fifth Avenue. Now, as you know, everybody, the first business day of every single month, this is very important. The first business day of every month, the Institute for Supply Management will release its PMI numbers for the manufacturing sector. Now, why is this important? Well, the manufacturing sector in the United States makes up about 20% of our overall economy. It's pretty important. And there's a very, very high correlation with expansion in the manufacturing sector and GDP growth. And there's also a very high correlation between GDP growth and the direction of the S&P 500, right? So about 70% of the time, I think it's 75% of the time, if GDP is expanding, right, the S&P 500 will be higher about 6 months later, okay? So it's very important to understand the health of the overall manufacturing sector of the United States, because if you have the PMIs trending up, right, going up every month, month over month, well, that is telling us that we're going to have a rebound in the manufacturing sector and that there's a high likelihood that GDP will be positive. And if that's the case, as traders and portfolio managers, as we know that 7 out of 10 stocks will follow the overall trend of the market, well, if GDP is higher, and that means 70% of the time the S&P is going to be higher, well, if we're looking to take long directional bets in the market, that is going to give us a pretty good risk reward. What's very difficult is if you try to get long and put long positions on when the general market is lagging or in a downtrend. It's kind of like a trout trying to swim upstream. It's not going to work out that well. Hey, Zozo Bob. What is going on? Always a pleasure to see you. Happy Easter to you and your family. I appreciate it. Sabina Sanchez. Dario says, hey everybody, Dario from Argentina, and happy Easter. Welcome, it's good to see you. Thanks so much for joining us. Yeah, Matthew M says travel as much as you can when you're young. Agreed. Totally agree. Sam M, what's going on? Mohammed says, thanks, Tom. Please visit the pyramids. I definitely will. This building that we're looking at right now is Amman, New York. This is one of the most luxurious hotels in all of New York City. It's absolutely beautiful. I think each room starts at about $1,100 a night, which is crazy. I mean, $1,100 is what some people's rent is. Kind of wild. This is the main Tiffany building. Now, LVMH Moët Hennessy, which is one of the most valuable companies in the entire world, Bernard Arnault is the CEO. They acquired Tiffany & Co. and spent about $500 million, so $500 million, renovating the new Tiffany flagship. So if you're making a visit to New York City, you don't have to buy anything. Just go in and take a look. It's amazing. It's an awesome place in there. And if you go all the way to the roof, you'll see the restaurant, and you're overlooking all of Central Park and Billionaires Row. It's a really cool experience. It's awesome. Josh S. says, my mortgage is $800 a month. What a blessing. I mean, that's awesome. Man. You know, maybe I just have this kind of skewed perception of reality, you know, living in New York City and Miami. But there's places across the United States, where you can own a home and your mortgage will be like $800 a month. I mean, for many people, their mortgage is like $5,000 a month. In Manhattan, many people's is like $20,000 a month. It's kind of wild. Hey, Brad, happy Easter to you too. Thanks so much for joining us. Sharon says, evening, Tom. Hope you had a great weekend. I definitely did. Hope the same for you. It's going to be a very, 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 very busy week next week as we hear from many Fed presidents, and we are going to look at this golden retriever. Look at him. Fed presidents. Lots and lots of Fed presidents are going to be speaking. We're going to hear from San Francisco Fed president, and also, the one Fed president which I always like to pay special close attention to is Neil Kashkari. I think he's a smart guy. I think he catches a lot of heat, but I always enjoy listening to him when he speaks. And to top it off, we're going to hear from Federal Reserve Chairman Jerome Powell again. He's been speaking every week so far. First, it was the FOMC meeting, obviously. Last week we heard from him, and then this week we're going to hear from him yet again. So it's going to be pretty packed. But particularly, we need to pay close attention to those PMI numbers. We may do a dedicated stream on how to interpret them. I think there's a lot of, in my view anyway, at least how I was taught, I interpret them a little bit differently than most interpret them on the street, in my view. This is the Peninsula Hotel here. Danny's is Trump Tower residential or commercial. So it's a mixed-use building. You have retail, you have commercial office, and then you have condominiums as well in Trump Tower, which is right here on 5th Avenue. But my favorite Trump building in New York City is 1 Central Park West, which is the Trump International Hotel and Tower. That's an amazing building. Now, there's 3 distinct entrances to that building. Door number 1 has the Michelin star restaurant Jean Georges. Door number 2 has the hotel, and in door number 3, that is where you have the residences. And the views are some of my personal favorite in the entire city. It's an awesome, awesome building. And it's not too far away from the Deutsche Bank towers. So for those of you who don't know, we have talked about this a lot, but that we do have a lot of new people here. Deutsche Bank was really the last standing bulge bracket investment bank on the physical street of Wall Street. Now, their headquarters used to be 60 Wall, and now they have vacated that building. It's totally vacant. I think they may do a condo conversion there. I'm not too sure. But they have now taken over the old AOL Time Warner Center. So that is now the new Deutsche Bank Tower. And it's a pretty awesome building. You have the Mandarin Oriental Hotel there as well. All right, let's cross. Yeah, go for, this is St. Regis is an awesome hotel. Isabella Sizamon Hotel has a beautiful restaurant. Yeah, I've been up there by the bar area. It's really nice. And, now that the weather's getting nicer, hopefully I'll be able to get up there a little bit more. Now, this is the University Club. This is another stunning building right here off of New York City's 5th Avenue. It's right on the corner of West 54th Street and 5th. This place is absolutely awesome. All right, Tom M, just cool it a little bit with the, I see some political stuff in the chat. the MAGA this, and then some people say, oh, Trump sucks and this and that. Just respectfully, don't bust my balls about that tonight. It's been a rough, I've been working like grind, so I just want to just kind of chill. Don't really want to, and I'm a Trump supporter, by the way, but just don't bust my balls with the Trump stuff tonight. It's going to get the chat on a hellstorm. I don't really want to deal with it, just respectfully. Now, to the right, you're going to see St. Thomas Church. Now, Fifth Avenue is absolutely rocking today, pretty much from St. Thomas Church all the way down to St. Patrick's. There was that kind of Easter parade slash, I think it was like an Easter Sunday. Patrice 2020, what's up? Yeah, Troy Atman, futures are looking good. S&P, NASDAQ, and Dow futures are all pretty much at spitting into record highs, which is great. We'll see if it can last. In 2 weeks, everybody, it's earnings season again. We have JP Morgan Chase coming up here in about 2 weeks. And not next week, but the week after, we're going to get CPI again. Man, St. Thomas Church is just absolutely stunning. It's probably one of the best architectural marvels in the city, along with St. Patrick's. Bill says, how high will Bitcoin go? I don't know. No idea. But what I can say is the following. The market is very, very clearly trying to tell us something, because look at a lot of the news that has come out. We've had about a 1.2 trillion or 1.4 trillion, I forget. I guess it doesn't even matter at this point. Spending bill that was passed, right? So at about a $2 trillion spending bill that was passed. And you have gold officially breaking out. So gold is up and out. It's go time for gold. We wrote about this in the Behind the Street newsletter, which I sent out Thursday, by the way. So if you want to, read all of our equity research for free, more than welcome to do that. Just type !news, NEWS in the chat. So kind of put the pieces together here, right? You have commodities in general across the board screaming into new all-time record highs, right? So commodities are performing really well, specifically crude oil. Look at the facade here at the Cartier store. But you have crude oil, again, back above $83 a barrel. You have pretty much all of the oil and gas stocks trading into new 52-week highs and all-time record highs. Chevron, ExxonMobil, Occidental Petroleum, all performing really well. So energy is leading. Commodities in general are leading. Precious metals are leading. And gold has officially broken out. Then you have digital gold, Bitcoin, trading into new all-time record highs. So what is the market really trying to tell you here? Well, I think that's up for interpretation. But if you had to ask me, the market is telling us that it shows no confidence, zero, in the government kind of reeling in government spending and doing the appropriate thing to really bring down inflation long term. So more spending, more money printing, that is the market saying you got to get long commodities, you got to get long precious metals, and you have to get long Bitcoin. At least that is my interpretation of it. But I don't know. What do you guys think? It's pretty apparent. It's pretty clear. If you zoom out on a monthly time frame on gold, I mean, that is probably it's one of the clearest and most beautiful cup with handle patterns I've ever seen on gold. It's massive. The measured move on that is $3,000 gold. All right, everybody, let's cross the street so you can see St. Patrick's Cathedral. Josh L., what's going on? Mia says Happy Easter. What do you guys think? Here we are, St. Patrick's Cathedral. MD, good to see you. Old wise hours, let's print those fiat dollars. Yeah, can't wait for sure. LJ says, wow, vacant at the Versace store. Businesses are leaving in droves. So the Versace store, that used to be the flagship store. They moved to Madison Avenue because the rent was too high. And temporarily, it was an Eden Fine Art Gallery. They have a few locations in South Beach. They have one in Soho. It's going to be interesting to see what that comes about. John says up prices of commodities, especially gold, means inflation is here to stay. I think you're going to see inflation continue to hover around the 3% range. I think 3% is probably going to be the new 2%. Now, I'm rooting for it to come down over time, which I think it will. But it's going to be very, very difficult for inflation to come down to that 2% target if you have crude oil ramping into the summer. And from the looks of it, right, I was telling you guys yesterday, my friend sent me a travel report from a consulting company, and they are expecting record-breaking tourism for major cities across the United States, particularly New York City, by the way. New York is going to be absolutely on fire. It's going to be rocking this summer. So much tourism, so much travel. People are going to be out and about. And again, we can sometimes use commodities and stocks in and of themselves as leading economic indicators. Equities are forward-looking by about 6 months. And just pull up a chart of any hospitality stock or any hotel stock you want, right? You could look at Marriott. You could look at Hilton. You could look at Hyatt. Earnings are ramping. If you've listened to any of the earnings conference calls, all of these CEOs are expecting the same thing, and they're saying the same thing. Occupancy rates are at record highs, and they expect 100% return to business travel by Q2. And guess what? Q2 is right here, my friends. So, to me, with crude ramping, hospitality stocks doing very good, and the narrative in general from a lot of these CEOs that run major hotels and casino gaming companies, I think this is going to be a pretty robust summer for travel. I mean, what do you guys think? Look at how beautiful those American flags are hanging off of Saks Fifth Avenue. MD says yes, and the same with cruises. Anybody here a big fan of cruises? I'm not a big cruise guy, honestly. Gopher Hockey's G says I would have to agree with tourism this summer, working for Intercontinental. We are seeing tons of bookings for the summer. People don't care about rates. Wow. I mean, you heard it there first, guys. That is a primary source. You have somebody in the chat who works for Intercontinental saying rates in terms of their hotel per night are, did you say they're at the highest levels they've pretty much ever been? Let me see. Yeah, he says, I would have to agree with tourism this summer, working for Intercontinental. We are seeing tons of bookings for the summer. People don't care about rates. I mean, there you have it. This summer's going to, that's my prediction. This summer, at least in New York City, it's going to be wild. And, you know, commodities and stocks are telling you that pretty much. Now, for tomorrow, okay, just to quickly segue, on the live stream tomorrow, we are pretty much going to be dedicating the entire stream. We're going to go line item by line item, breaking down the Institute for Supply Management PMI report. Now, oh, look at how cool this is. They made like a spring. This is like a sheep. Look at that. That's gorgeous. Isn't that cool? This is right at Rockefeller Center. pretty cool, right? But yeah, tomorrow we're going to be doing a full breakdown of the ISM PMI numbers, so you're not going to want to miss that stream. Now, for those of you who don't know, generally speaking, a reading above 50 signals expansion in the manufacturing sector of the US economy, and a reading below 50 signals contraction. But that's actually not the correct way to interpret the report. On our second channel, which we're going to start up here in a minute, we're going to do a tutorial on the appropriate way to interpret that data. It's really just the trajectory of those PMIs, right? So if you have a PMI of 45, the next reading 46, then 48, many people would look at that, and the financial media often reports that and says, you know, the manufacturing sector contracted because it's less than a 50 reading. But the trajectory of those PMIs are actually turning up. And that's why many people miss this move in equities, because all of the leading economic indicators are still technically negative, but they've been ramping and turning up for over a year, right? So don't necessarily focus too much on the number itself, focus on the trajectory of those numbers. And this is why, if you work in the financial industry, you utilize Microsoft Excel quite often, right? Building different models. So I would suggest building a model All right, let's make our way out of Rockefeller Center. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams every single day, starting at 8:30. We'd love for you guys to join us. Also, if you are interested in a lot of the talk that we have each and every night as it relates to the financial markets, we do write a free investing newsletter called Behind the Street. If you'd like to sign up to receive all of our equity research for free, feel free to scan the QR code on your screen and punch in your email, and it'll take you directly to our Substack, or you could just type !news, NEWS, in the chat, So for those of you who can't stay the full 2 hours for the stream, I understand it's long. We send you a full recap in detail for you to use for free every other Thursday. So we are now going to walk past the Rainbow Room. You're going to have Radio City Music Hall on your right and the entrance to Rockefeller Center on your left. This is one of the main entrances you could use to get to the top of the Rock, which is, I would say, my favorite observation deck in the city, even though that there's a lot of newer ones. I think the newest ones are like Summit at One Vanderbilt. What else do you have? You have the Edge, right? That's another one, which I've never been to either of those. Big line too. Man, huge line tonight on Easter Sunday for the top of the Rock. I mean, it's a clear night and it's not really that windy, so I'm assuming it's probably gonna look pretty nice up there. Hey, Colton Manning, it's good to see you. Hopefully you're doing well. Let's head down towards .34th Street. That's where we have to head anyway. Yeah, Who Dat Dave? It's been quite wild, right? This rally in equities. But you know, if you really look under the hood of this market, there's still a lot of stocks that have not regained their new highs, right? And a lot of previous true market leaders that have fallen out of fashion in a major way. For example, one of my biggest positions, this was during the run-up of 2021. So in the bull market, that massive, massive bull market of 2021, my biggest position was Atlassian. The company has a ticker symbol of TEAM, T-E-A-M, and that stock is such a laggard, such a stalwart right now. And that's why it's important, you can't marry a stock, right? When the move is over, the move is over. A lot of these stocks can go dormant for 5 years or a decade. You know, just look at Microsoft. After the 2000 tech wreck, you know, how long did it take Microsoft to regain new all-time record highs? It took quite some time, right? So stocks fall in and out of fashion, stocks come and go. And the bear market that we are just emerging out of was very, very ferocious in a major, major way. Hey, Steve CR, what's up? Yeah, those are other names too, right? Remember Zoom Video? That was another TML. I think that's still down 70 or 80% from all-time record highs. Yeah, Chris is marry a broad ETF instead, for sure. This is more along the lines of if you are trying to generate alpha, right? If you're a PM on Wall Street, or you know, you're managing your own money and you're trying to get risk on or generate outsized returns, you can't own beta. You know, if you want to just own beta, you could just buy the S&P 500, which is not a bad idea at all. Almost 100% of the money in my retirement accounts is just indexed to the S&P. But if you want to try to generate outsized performance, you kind of have to get very, very concentrated in a select few names, right? A lot of people say, oh, this is Mizuho, by the way. So if you look directly over the Capitol Grill, that's the Mizuho trading floor. All right, Kelly is an NPC, so we are going to get her out of there. But the Mizuho trading floor is right here. And then you have UBS and Neuberger Berman. Look at that. Let's go up by the Hilton and then make that lap and then go down. Troy Atman says you want great companies and fair prices. Warren Buffett, yeah, for sure. I think, and to Troy Atman's point, a lot of people kind of get confused. They think the key to Warren Buffett's success is diversification. How many times have you heard that? You need to be well diversified. Well, if you want to really, really make the money that Warren Buffett has made and a lot of other very successful managers on Wall Street, you're really, really going to need to get risk on and get very concentrated. So if you look at the portfolio of stocks that Warren Buffett owns, they're pretty concentrated, right? In comparison to his AUM. This is a stunning shot going all the way down to the World Trade Center. We're going to continue up by the Hilton. Yeah, the ticker symbol for Atlassian is TEAM. Yo, what's up, man? Yeah, good to see you. What's up, Colton? What's going on? Oh, no way. You working right in here?
Security, yeah.
Dope, man.
Yeah.
Awesome. That's a good gig.
Oh, yeah.
Do you do overnights and stuff?
Sometimes, yeah.
Yeah? What are you working for? What's your hours right now?
Noon to midnight.
Oh, yeah? Cool. Nice.
So I'm on stuff.
How do you like it so far?
Loving it, man.
Yeah? And you live in Brooklyn now?
Yep.
Cool.
Yeah.
Well, welcome to the city, man. We're happy you're here.
Thanks, man.
That's awesome.
Yeah, you motivated me to get here.
Yeah, if you're ever in the city during normal working hours,
Right.
I'm right over there. Just shoot me an email or something. We'll get coffee.
Absolutely, man.
Yeah.
Sounds good.
But dude, pleasure meeting you.
Pleasure meeting you.
Super happy you're in the city.
Yes, sir.
Yeah, I'll see you around, all right?
Good one.
Hey, take care. That's Colton Manning from the chat. This is a nice building here, man. I think there used to be at 13. This is the MoMA building. Mr. 007. Good to see you. We'll make this left at 54th Street. This is the Alliance Bernstein building. And just to the right, you have the Warwick Hotel. Yeah, that's Colton Manning from the chat. Good stuff, good stuff. We've successfully recruited him to New York City. It's the way to do it, right? Steinway Tower. Skinniest residential apartment building. Chris says if you're going to Boston, go to, what is that? Is that a restaurant? I'll be in Boston Friday. I'll be there Friday, Saturday, Sunday, and then Monday I'll be back in, what's it called? I'll be back in Miami. So we'll be doing these streams from Miami Monday through Thursday, and then I'll be back in New York City next Friday. So we're going to be doing a little bit of travel, so I'm excited about it. Hopefully the weather will be good in Boston. Usually, unfortunately, it's not, but hopefully it'll be, in the 60s and 70s. Let's hope. Now that Hilton flagship hotel that we just passed, that was fully renovated. Fully renovated during the pandemic. It's really nice in there. They redid the bar. There's even retail there. I think there's a hair salon. It's pretty nice. Chris says it's a coffee shop, a cafe. I'll go, for sure. I forget the name of the hotel I'm staying at. Maybe you can guess the name. It's the way it was described to me, it's like the Plaza Hotel of Boston. I'm not sure if that helps. But the Plaza Hotel of Boston. It's like a very fancy place. Yeah, I'm gonna be staying there. Never been. Mr. 007 says, hey Tom, when you're down in Miami, we can get coffee? For sure. Now, my favorite place is right on 72nd Street and Harding Avenue. Cachito, I think it's called. Cachito Coffee and Bakery, really good. Fahim says the Omni Parker. I don't know if that's it. I really should know the name, but I don't. Talk with Tiffany says the Fairmount. I think that may be it. Maybe. I was looking at some of the photos online. It was very fancy place. All right, so we're coming up on the NQ. Oh, that's it, Chris. Chris, you got it, my friend. Tom, there's a Fairmount Copley Plaza Hotel in Back Bay. That's where I'm staying. That's the place. So any people from Boston, is that a good spot there? Am I going to be in good hands or what? I'm excited about it. I was looking at the pictures. It looks really nice. But that is where I will be. All right, we'll go up 2 more and then we'll cross by the Park Central Hotel and then go down. Isabella says yes. Wow, cool. Yeah, I'm excited. I'll be there 3 nights. And I never get to spend any time in Boston when it's nice out. So I have an open mind, let's just say that. You could call me a New York and Miami maximalist, I guess. But I'm willing to give Boston another shot, for sure. Now we're coming up on the south side of Carnegie Hall. 881 7th Avenue. This is where we started the stream from the other night. Man, I always like looking up at 157. Hey, Steve Buffalo, this is Tom. You got to go to Boston's Little Italy. I'll check it out. I mean, I'm going for like a big event, so pretty much all of my time there is scheduled, but I'm going to try to get out and explore for sure. I think Sunday is probably going to be the best day for me to do that. So I'm probably just going to crush like 2 hours worth of YouTube. Well, it's only an hour flight. I'll probably be watching YouTube the entire flight. Just things to do in Boston, interesting things to see, tourist attractions. Fahim says the Fairmont's cool. Check out the gardens in the Boston Public Library while you're here. I'll take a screenshot of that, Fahim. Thank you for the recommendation. All right, 57th Street, Billionaires Row. RPT's Real Estate Boston event. No, I'm gonna be going to a wedding. Look at that, Central Park Tower. So I guess we'll just go ahead and jump into it, people. We have a few things to run through here in terms of the schedule for next week. Obviously, tomorrow's April 1st. It's Monday. It is the official start of Q2. And at 10 a.m., we're going to get the ISM PMI numbers, so the manufacturing numbers. But then we're going to hear from the Fed Governor Lisa Cook is going to be speaking. This is one, we're going to hear from a lot of Fed representatives. April 2nd, or the Tuesday, we're going to get the jobs numbers out. So more talking points for the administration, should this come in rather fair, I should say. Then we're going to hear from Fed President Loretta Mester and San Francisco Fed President Mary Daly. So this week is going to be absolutely jam-packed. For Fed representatives and Fed presidents specifically. All wise owls is Q2 PMI, yeah. And then April 3rd, 2 days after we get the manufacturing PMI, we are going to get the services PMI, which is also important because services make up about, give or take, 70% of GDP. US is more of a services economy. Now you may be thinking, well, you know, since services make up a larger portion of GDP, should we have more of a weighting on services than manufacturing? And the answer is no. You should have them equal weight, in my view. At least that's how I was taught. But as the days goes on, we're going to be doing a breakdown, again, line item by line item of these reports. If you type ISM in the chat, again, ISM, it'll drop you to the Institute for Supply Management website, where you can actually get the physical copy of those reports. Now, the most important portion of those reports, in my opinion, if you scroll down about a quarter of the way, it's going to say what respondents are saying. Because again, this is a survey, right? It goes out to executives in the manufacturing sector and they give feedback, right, on the future. This is why it's a leading economic indicator. So again, if you type ISM, if you go to the website, you can have all of the archived reports at your disposal. I'd recommend downloading them and reading them and look at what the respondents are saying. They'll give you an update on new orders. They'll give you an update on inventories. And it's very, very, very important. Let's keep tabs on that. All right, Central Park South. cross to the north and then loop around. Maybe we'll take a little detour through the park. Hey, Austin City Limits, what's up? Someone says mic issues. Yeah, this microphone has been giving us some issues. All right, what about now? We killed the mic. We unplugged the mic. I think I just have to get a new mic. All right, you're now going to take a little bit of a detour through Central Park. Probably have to buy another microphone. I like keeping the mic plugged in just because it's so windy in New York. Look at these two beautiful buildings, 220 Central Park South and Central Park Tower. Really quiet from inside Central Park. Okay, got it. Everybody's saying it's better. Awesome. Look at how peaceful it is in the park. Try to give you a shot looking north. See, says Tom, you should get a new mic already. I'll try to find the time to go to get one for sure. Man, I really miss living right on Central Park. Go running all the time. It's a great place to live. I like this building because there's pretty much a whole wall of balconies. I mean, look at that. You have a front row view of the park and a front row view of the Macy's Thanksgiving Day Parade. Hey, First Valley Business and Consulting. It's a silly question. Is this recorded on a phone or a camera? It's great quality. Thank you for that. Thank you for saying that. Yeah, this is, so we have a streaming software called Prism, and I'm using an iPhone 13 mini. So I download the streaming software on the phone, and then from the phone, we project it through Prism. You could also use Streamlabs as well, but in my view, that's a little bit more of a janky software. I think Prism is better for mobile streaming. But yeah, 1080p, 4K, it's gonna be difficult.
Watch your vagina. The shit went inside me one day. Yeah, I know.
One day, maybe we'll be able to stream in 4K. But this is 1080p. I think the 4K streams would be absolutely insane. Imagine watching this live stream in 4K on an Apple Vision Pro or an Oculus or something like that. I think that's next level stuff. Maybe there's a way that we could do these streams on a 360 camera, and then people could watch it on a Vision Pro, and it's like a total immersive experience as you're looking around. I think that'd be amazing. This is 1 Central Park West. This is the Trump International Hotel and Tower, and the building right next to it is 15 Central Park West, which is one of the most luxurious buildings in New York City. It's funny because this was completed in 2008, 15 Central Park West, and it sold out very, very fast in the depths of the financial crisis. It was really marketed towards upper echelon, ultra high net worth individuals. But this building is very famous. You have the former CEO of Goldman Sachs, Lloyd Blankenfein, has a place here. Lots of private equity giants, venture capitalists are here. Also, used to have A-Rod. Alex Rodriguez used to be here too. Now, this is the Deutsche Bank Towers. Deutsche Bank, the German bank, was the last standing physical bank on the street of Wall Street. So the physical Wall Street in Lower Manhattan. They vacated 60 Wall. It's totally vacant now. They've taken over the old AOL Time Warner Centers, which is a related properties building right there. And that's, you know, a lot of times when people think New York City, they think about finance, they think Lower Manhattan and the physical street of Wall Street. There's really not much going on down there anymore, actually. Ever since the internet and computers, there's really no reason to be on the physical street of Wall Street. There's really no more broker dealers down there. Even the New York Stock Exchange, yeah, there's market making and there's trading that goes on down there, but it's pretty much just like a TV studio for CNBC. A lot of the settlement actually happens in New Jersey, by the way. So if you think about big banks, hedge funds and the like, they're pretty much all on Park Avenue. From 42nd Street, Grand Central Station, all the way up to about 59th Street. That is where the majority of the banks are. For example, 270 Park Avenue is that brand new JP Morgan Chase office tower, Jamie Dimon, right? His building. Also 350 Park is going to be the new competitor to compete with Jamie Dimon. That's going to be Ken Griffin from Citadel Securities is going to build a super tall right on Park Avenue, and he's going to build one in Brickell, Miami, which we're going to see in 4 days here. Hey, Lance, thank you so much for your generous $10 donation. This is Hey Tom, gift to get you another microphone. I appreciate it. Thank you for all your great streams. Well, thank you for the support. I will definitely be going to B&H tomorrow and picking up another mic. I've recommended this book a million times, but we do have a lot of new people here. If you want to really have a deep understanding of just how Billionaires Row and a lot of these other massive mega tall condos were built, check out this book called Billionaires Row by Catherine Clark. Now, Catherine Clark is probably one of the most famous Wall Street Journal real estate reporters. She's been covering some of the top real estate developers in New York City. I would say the number one, in my opinion, being a little bit biased, is Extel. So EXTELL. CEO is Gary Burnett. And he pioneered Billionaires Row with 157 West 57th Street, the first building ever constructed to coin the name Billionaires Row. It's this building right here. It's just over 1,000 feet tall. It has ultra luxury condos, and it has the very luxurious Park Hyatt Hotel, which is a 5-star hotel. But then he went on to one-up himself by building Central Park Tower. And just recently, the duplex that sits just under the triplex at Central Park Tower, I think sold for maybe $115 million. That was sold by the Eklund Gomes team at Douglas Elliman. They are one of the top teams at Douglas Elliman in New York City, alongside us, the Kirsten Jordan team at Douglas Elliman, and the Noble Black team. But yeah, that book is really good because a lot of people, when they see these massive buildings, they think a developer can just buy a plot of land and build as tall as they want. You know, 157 was in process. The vision for 157 was going on for like 15 years because it's a very, very long and laborious process of assemblage. That's what it's called, to assemble those air rights. You have to purchase the air rights from neighboring buildings and actually stack them on top of one another. So it's like a long, drawn-out game of Monopoly, so to speak. It's very, very cool. Now, Harry Macklowe Industries or Properties, is responsible for the largest office to condo conversion in the city's history. The building is One Wall Street, but 432 Park Avenue is kind of his baby, which is one of the most over-the-top ultra-luxury condos that sits right off of Park Avenue. And that was a really big process of assembling the air rights and buying out the old Drake Hotel. Really, really cool. If you want to learn about New York City real estate, particularly from a development standpoint, it's a really good book to read because you're going to get an inside scoop of all the top developers, right? Now, the building with the gold top is 220 Central Park South. Funny enough, that's Steve Roth's company, Vornado Properties. And Vornado is also doing the massive, massive overhaul of the Penn District, or the 2 Penn project. And Ken Griffin from Citadel has about 3 floors in that building. Now, Vornado is publicly traded. Extel and the others are private. This building is going to be rentals. I remember when this used to be a very, very raggedy old office building, and there used to be a Starbucks right here. There used to be a Starbucks, like this old clothing store. I mean, this whole area has changed so much. Let's cross here. You can see the Mandarin Oriental, but we're gonna head downtown now. But if you guys are enjoying the live stream so far, feel free to leave a like on the video and click the subscribe button if you're new. We do these almost every night, right around 8:30, 8:45. T-Cal says Miami will never touch New York in anything. Maybe, maybe not. You know, chances are if you're a big player in New York City, you have significant capital to work in South Florida. Almost every big player does. It may not be Miami directly, it may be Palm Beach, West Palm, right? But it's all interchangeable. Miami has done a really, really good job with job growth. It's a very business-forward city. I own property there in full transparency, so I have a vested interest in saying what I'm saying. But I put my money where my mouth is. And I think that Miami is gonna have a very, very bright future. But I also think they're totally different cities. They're very strategically located because if you work in Manhattan, in theory, you could come to the city for a day and then be back at home in Miami the same day. It's a 2.5-hour flight, 3-hour flight, it's nothing. Can't say the same with New York and LA. I mean, that's exhausting, that's tiring. You can't do it for business. So it's very, very close to one another, very strategically located, and it provides you a nice reprieve when it's miserable and cold and nasty in New York. You just fire up the bird and head over to Miami and you're there in 2.5 hours. So, as you're seeing this seismic shift of capital flight, admittedly, out of some major cities like New York, a lot of that is going to the state of Florida in general. It just so happens a lot of it is landing in South Florida, and that's attracting a lot of good job growth. The problem with Miami before, and I've said this many times, is the volatility in the real estate over there. Now, the reason why it's been so volatile is because of the job stability over there. And that is getting better in a major way. historically, you could not compete with New York City salaries in Miami. You'd be making like 50% less. But as you've had major companies move to Miami, you know, and I'm very well connected in the tech industry, these are some pretty high-paying jobs. You know, six-figure salaries in tech and in banking and in finance and hedge fund business, private equity. You know, I have a couple friends who work at Thoma Bravo. They're based in Miami now. You know, that is Orlando Bravo's shop. I mean, they're giant, right? So it's a gateway to Latin America, and there's big money moving there. And I think this time, right, it's always the famous last words on the street. You know, it's always different this time. It's never different. But I think what's different this time about Miami is there's actual real jobs in this economic cycle, as opposed to what happened leading up to the 2008 financial crisis. Everybody was just bidding up the real estate, buying second and third homes, right? There's actually real people moving there to get real high-paying jobs. All right, let me catch up on some of the comments, and then I got to plug in my phone. Jose V says, given the current state of commercial real estate, I'm wondering how difficult or easy it is to get variances for the conversions from office to residential. Well, a lot of times it just doesn't pencil. The deal just doesn't work. There's a lot of zoning regulations, and most of the time it could even be more expensive to try to do an office to condo conversion. It might be less expensive sometimes just to let the demolition costs come down, demo the whole building, and then just build new resi. There's so much stuff that goes into it because the floor plates. Well, let me just plug in my phone. I mean, if you think about the HVAC, if you think about the plumbing in a big office building from the 80s, you know, if you have to redo all that, that could be big money. And a lot of times that could put the deal underwater. And in some parts of New York City, you're not even allowed to do it. Just hold on one second. Now, Lower Manhattan, right, or FIDI, Financial District, that has really seen the most success in doing these office to resi conversions. And some of them are actually pretty nice. I mean, they still look, you know, 95 Wall Street, which is on the corner of Wall and Water. Pretty much a lot of those buildings by Hanover Square, almost all of those are condos or residential conversions, I should say. A lot of them are rentals. Yeah, I mean, I think it's a good idea because in New York City we have a housing crisis. There's just not a lot of supply, and there's not a lot of affordable housing on the market for people to live. And to your point, basic supply and demand. You know, if you want to satiate that demand and bring prices down, you're going to need supply. And cities like Austin, Texas have been doing a really good job of that, by the way. So the main cities that were really, really frothy during the pandemic, Austin, Texas, and the like, they're starting to cool significantly. You're starting to see rents come down. You're starting to see prices of condos and single family homes go down. Why? Well, they've been building. They've actually been building product there. So you have a lot of product coming on the market, satiating a lot of that demand, and it's been cooling prices. Now, the media has been trying to spin that into this fear narrative, right? And a lot of that has been rather nonsense. Because on one hand, right, the media will put out these articles saying, you know, America is going downhill. Nobody could afford to buy a house anymore. You know, the middle class guy is being priced out of the housing market. You know, America's over. But then, once prices do start to come down, now the fear headlines are home prices are cratering at a faster rate than they did in 2008. This is going to be worse than the financial crisis. Housing prices are going to collapse. Now, media is just trying to drive sensationalism, right, and trying to drive clicks. But at the end of the day, it's supply and demand. And at the end of the day, if you want to bring inflation down to that 2% target, you got to bring shelter costs down. And shelter makes up about 40% of that CPI number. And the only way that you bring prices down, right, Elizabeth Warren wouldn't agree with me. You know, pretty much everybody in the Biden administration wouldn't agree with me, but you got to build. You got to build homes. You got to build condos. So these states and these cities that are actually doing the right thing by building, guess what? The prices are starting to come down and people can afford to live. And I don't think that's a bad thing. I think it's good news that people can afford to live, you know, normally, you know, not hand to mouth. At least that's my opinion. All right, let's start to head downtown now, because I have to get back to 34th Street, Penn Station. Yeah, Steve Ciaris has got to build houses people can actually afford to own. This was a major topic on an earnings call. D.R. Horton is the company. So if you go through all of the major publicly traded home builder stocks, right, or the home builder companies, Taylor Morrison Home, Toll Brothers, D.R. Horton. Well, number one, they're all leading. They're all trading into new highs, almost all of them. But a lot of these CEOs have been saying the same thing. People want relatively smaller, more affordable homes, and home builders are doing better because they could actually move product a little bit easier. Because if you think about a resale, right? If I'm gonna list my house on the market, I probably don't have so much room to negotiate. But if you're a builder, you have an entire company behind you to negotiate. You could pay the taxes, you could pay the closing costs, right? The transfer taxes, the mansion tax if you're in New York City. A lot of times that could be paid for by the sponsor, the builder. They could do rate pay downs, right? So maybe they could buy down a couple points on your interest rate. So there's a lot of creative things that they can do to get the deal done that you wouldn't otherwise be able to do in a resale, generally speaking, right? You know, if you have a multi-billion-dollar corporation behind you and you're buying new construction, well, you can negotiate more in terms of, you know, maybe just overall discounts off the asking, or, you know, those things that we talked about before. So that will help those deals get done. And they've been able to do that with maintaining pretty good gross margins too. Hey Abdullah, what's going on? MDs, they could also buy down the rates and throw in thousands of incentives. Yes, if you are a first-time buyer, buying from a builder is the way to go. Yeah, there's a lot of things that can be done. There's definitely a lot of things that can be done for sure. Yeah, the term, if you're buying from a builder, right? You're buying from the sponsor, right? It's considered you're buying sponsored units. So if you're in a big condo, if it's new development, they're considered sponsor units. All right, this is going to take us directly through Times Square. I don't know. I mean, where is everybody from in the chat? Are you guys seeing housing prices starting to cool or rent starting to cool in your neighborhood? Are you trying to find better deals? Are you able to get better deals? Kind of what is going on in your neck of the woods? Brad says, I found a few advantages to renting since I moved to Houston. I'll buy sometime, but I'm liking the flexibility of renting. Yeah, a lot of times renting is a lot better depending on your situation.
I'd say particularly if you were young and maybe a little bit early in your career, you can kind of bounce around a little bit. You know, let's say if you take a job in New York and then you take a better opportunity in LA, you could bounce around and have that freedom. You don't have that overweight over you. I definitely agree. Somebody was asking about the NAR settlement. We've talked about that ad nauseum at length, but essentially, you know, for those of you who don't know, the National Association of Realtors settlement, essentially what was alleged is that there was price collusion, right? And you have the illusion of negotiating your commission, which is kind of what was alleged. So if you have 5 brokers in your neighborhood and you interview 5 brokers to sell your house, but if all 5 of those brokers are colluding and saying, hey, we're not going to drop our commission less than 5%, well, then that's price fixing and that's the illusion of negotiation. So now you will not be able to advertise a buy-side commission on the MLS. But as I've said before, if you were selling in New York City, this really is no change to you because we don't have MLS here. So essentially a buyer would just have to negotiate their own commission with the buyer's agent, which I don't think is going to happen because first-time home buyers, as we've talked about, they could barely come up with the money for their down payment. So there's no way they're going to be able to pay a broker or a real estate agent out of pocket. So I think in some of the lower price markets, people are just going to have to go it on their own. There's no way that somebody is going to hire a real estate agent on the buy side to help them in their search if they have to pay out of pocket. It's just not going to happen if we live in the real world, right? I mean, think back to the time when you bought your first house or investment property, right? You were probably represented by a broker or an agent, or maybe you represented yourself, I don't know. But you didn't have to pay your own broker. Your broker got a cut of the seller's commission. Now that that's going away, it'll probably be a lot of direct business to the seller's agent, and a lot of first-time home buyers at lower price points will probably have to go to loan. And I think that could be an issue in most cases, but maybe it'll start to really put more focus on the buyer to say, hey, you gotta, you know, really be involved in the process. You got to do your diligence. You got to learn how to negotiate, and you got to learn the process before you get started. Because you'd be surprised, right? A lot of first-time home buyers, unfortunately, get hosed. You know, I've even seen it at higher price points here, where there was things that they could have easily negotiated. So, you know, we'll see. I think at lower price points, maybe things will be more commoditized. Redfin is already trying to do this. Zillow, a lot of the iBuyers, making it very, very transactional. But there's a lot of real estate transactions at the upper end of the market, or you know, a lot of deals are very complex and convoluted. There's maybe liens associated. There's, you know, different encumbrances. Deals could be a nightmare. If there's any agents or brokers in the chat, or anybody who has a sizable portfolio of real estate, you know exactly what I'm talking about. Not every deal is a clean and easy deal. Almost no deal is a clean and easy deal. There's issues, there's things that you need to iron out. And as a first-time home buyer, that may be a little bit difficult for you to navigate yourself. But, you know, just do the diligence and just double down and take matters into your own hands and, you know, learn the process, and you'll be fine. I don't think it'll be a big issue at all. Who knows, maybe in 10 years, you know, transfer of ownership and everything will just be done through smart contract. The world is ever changing. Markets, every industry in the world is ripe for disruption. right, we are on Broadway now. If it's not too crowded, we may try to make our way down through Times Square. Hey, Michelle, good to see you. Clumby Weekends is from Toronto here. Housing prices haven't cooled yet. Copy that. Thank you for that. Yeah, Jose, this is title problems, things like that. JC, this is smart contract is neither smart nor a contract. NAV 407. This is Ontario cities have quotas and it's working and prices are coming down. Well, that's good news. Like, I think we could all agree, right? No matter what your political background is, you know, in any major metropolitan area, a starter home is almost unattainable for a lot of people. And that's a problem, because whether you like it or not, the data shows that the vast majority of wealth for first generation millionaires is made up in equity in their home. So if you price people out, it's going to be difficult for the average American to build a nest egg. So as prices come down, you know, it'll allow people into the market. I mean, God forbid, right? God forbid prices come down and people can afford to live. That's kind of the way I think about it, but if you just buy a house and your valuations go up immediately, you may feel good because you're making money on paper, but that's actually the exact opposite of what you want. Because if you just buy a house, right, and the value of your home, let's say, goes up 20% in the first year you bought it, you may be feeling good, but guess what? All of your overhead costs are going to go up along with it. Your taxes are going to go up, your insurance is going to go up, and you're not reaping any of the rewards because you don't have access to the equity, right? So if anything, right, if you're planning on living in your home for like 10 years, you don't want the market to go on a tear in the first 5 years of ownership. You could care less, right? You want to focus on keeping your overhead costs as low as possible. And if you can't homestead or something like that, well, you know, chances are your taxes are probably going to go up in a meaningful way. Oh, this is where they do that show, The Hamilton. I've told you guys this story about Hamilton a million times, but when this was just coming out, one of my clients was, you know, just kind of dropped it and said, yeah, I want to go see Hamilton with the wife and kids. And this is like when it just came out. And I was like, oh, no worries. I'll get you tickets to see the Hamilton. And he was like, what, are you kidding me? No way. I'm like, yeah, no worries. You know, thinking I could just expense it via T&E, put it on my card. So I tell my boss about it, and he freaks out when we find out how much the tickets were. He was steaming mad. I'm surprised I didn't get fired. So long story short, we spent, I think it was over like $3,000 on tickets to Hamilton. And I had no idea how ridiculously expensive they were at the time. But the deal was a monster deal, a massive deal. All right, this is Restaurant Row. But I want to show you guys this cool building here. 740 8th Avenue. You guys are going to have a field day with this. 748th Avenue. Check it out. Now, we just talked about Extel as we were talking about 157 in Central Park Tower. They are going to be building a new building right here. It's called The Torch. You guys got to look up some of the renderings here. And I'm going to put a picture of the rendering on the screen, and I want you guys to let me know what you think. So that massive building that's sticking up, that looks like a torch, that's what it's going to look like. So they just broke ground on it. It's going to sit right here. It's going to be, I think, 800 unit hotel. They're going to have a drop ride attraction, kind of like that you have in Vegas or something. And it's developed by Extel. It's called The Torch. The thing is going to be absolutely insane. 748th Avenue. The Torch by Extel. Isn't it crazy? Look at that thing. I know, Theo's like hideous. Maybe it'll start to grow on us. You never know. We said the same thing about 432 Park, but you never know. A lot of times when you continuously look at it in the skyline, day after day after day, the design and the architecture kind of grows on you a little bit. But yeah, that's what's going to go up right next to, pretty much right here. There's going to be a lounge. There's going to be 2 restaurants, an observation deck. Things are going to be wild. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and subscribe to the channel if you're new. We do these live streams almost every single day, starting at 8:30. Joel PM's is cartoonishly bad in my opinion. We'll see how it turns out. I'm not the biggest fan of it, but you never know. You never know. It could possibly grow on you. That's what happened with 432 Park. There were tons of architectural critics that were ripping that building apart, but it does look like something from Dubai. It really does. Yeah, very Middle Eastern, or even, you know, kind of looks like something that could potentially be built in China, right? Singapore. We got 20 plus blocks to go until we're back at Penn Station. This is the West in New York. I don't know if I could ever be in Times Square. I think it's just a little bit too much for a living environment. That's just me. Coming up on the Port Authority bus terminal. I hear rumors that they're going to completely redo this terminal too, which is going to be a huge plus for the city if it actually materializes. like it's garbage night. You have the New York Times building just off to the left. Hey, Luxury Legacy Lane. Good to see you. I know. Theos, I can't believe nobody figured out how to handle garbage in New York. It's definitely a work in maybe not progress. Man, Port Authority is absolutely repulsive. All right, you have the New York Times building here. Datadog has their corporate offices there. As a little bit of an announcement, we briefly talked about this last night, but if there's any subscribers here to Investors Business Daily, I'm actually going to be now writing a column at IBD. I'm going to help in writing the Leaders and Success column. So essentially, I have to come up with pitch ideas to pitch to the editors at IBD on, you know, some of the most successful fund managers on Wall Street. But not only that, you know, CEOs of companies who have, you know, turned their company around, or founders, really any person who's built something extraordinary, and schedule interviews for the Leaders and Success column. So if you're a subscriber to IBD, you'll probably be seeing our work hopefully very soon. And I'm really excited about it. I have probably a list of 8 or 9 really solid ideas that in this coming week we are going to be pitching. And excited to get started. It's going to be a good opportunity to get, you know, in the same room as some of these top managers and bring you guys good content there too. Now the Leaders in Success column is published every 3rd day on the website, and it's also printed weekly in the paper, so you could read it both online and in the print edition, which I think is going to be really cool. We have more ideas coming down the pike. You know, I've known a lot of people at Investors Business Daily and O'Neill's Global Securities for a long time, and I think 2024 is going to be very exciting. So once we have our first, we got some derelicts over there, but once we have our first article published, I'll be sure to share it and let you guys know. Sam Oliver says, Tom, why is gold on the rise? Well, probably for a few reasons. We just passed another $1.2 trillion spending package. I think that's probably one. That's the market telling us that they probably have no confidence in sustainably bringing inflation back down to 2%. You also have commodities ramping, but if you want to know in a little bit more detail, we wrote an article about this and I emailed it to everybody. If you want to read it for yourself, you can just scan the QR code, punch in your email, and I sent it out Thursday night. That's one of the main things we talked about, is the price action in gold. It's officially broken out. It's essentially go time for gold. I mean, this is risk on here. This is a massive multi-decade breakout in gold. You could have $3,000 gold here on this breakout. All right, we're coming up on Madison Square Garden. I'll just give you one more look up north into Times Square. But yeah, if you want to receive all of our research, you can just scan the QR code on your screen and punch in your email, and that will take you to our Substack. We publish every other week on Thursday. Yeah, but thank you guys for the support. I appreciate it. I think it's going to be a good year. It's going to be an exciting year. We're going to do a lot of fun stuff. Eighth Avenue is not the best. It's a little sketch here. Man, look at that. This is like the Mount Everest of garbage. I should say recyclables. Adventure says, yeah, but 3,000 isn't worth what it was because they keep printing more money. Yeah, well, I think that's the thesis, right? Isn't that the whole thesis? Gold is a long-term store of value that'll help you keep up with the pace of inflation. I think that's the thesis for getting long gold in commodities and things like that. Now, another interesting perspective to think about is the following. Now, as we know, in the United States of America, for the first time in a very, very long time, we now have positive real rates, right? So you have nominal rates and you have real rates. So in the US, you have real rates for the first time in a long time. So that's actually attracting major money inflows from around the world, because they can get an attractive risk-free rate of return. I should say a real risk-free rate of return for the first time in a long time. So that could be another catalyst that kind of keeps propelling this economy forward, is the capital flight from other countries that are not doing so well into the United States. And as you have more money flowing into the United States and buying bonds, well, we know there's an inverse correlation between bonds and yields, or the prices of bonds and yields. So as bond prices go up, yields go down, and as yields blow off, the prices of bonds go down, right? There's an inverse correlation. So if you look at the CME Fed Watch tool, so if you type !CME in the chat, this is a really good free resource for everybody to look at. Once again, if you type !CME in the chat, it's going to bring you to the Fed Watch tool. And it's pricing in 3 interest rate cuts for this year. So if interest rates start to come down substantially, well, maybe that's going to make the real rate of return potentially a negative real rate of return again. So what does that mean? That's going to force investors into the market in search for yield. That's kind of what created this massive stock market melt up since the lows of the 2008 financial crisis. You know, artificially suppressed interest rates. Because when you have artificially suppressed rates, investors want to invest their money to keep up with the pace of inflation. But they can't park money in money market accounts or buy treasuries if they're yielding negative yielding assets, right? So that rotation then has to go into risk-on assets in search for yield. That's what creates this multiple expansion in the stock market. So money goes into equities, money goes into venture capital, money goes into private equity. And keep in mind, there's $6 trillion in money market accounts. This guy's crazy on this bike. There's $6 trillion currently in money market accounts on the sidelines. So should rates come down, that money is going to have to rotate out of that and find places to make an attractive return. Because if you have $6 trillion in money markets right now, that's compounding out at 5%. That's very good. So there's tons of dry powder on the sideline. And it's going to be very interesting to see how this plays out. All right, this is the Moynihan Train Hall. And this is right behind Madison Square Garden at Penn Station. Hey, Pineapple Water, what's up? I know, I saw that, Peter. Isn't that crazy? $10,000 a metric ton. Commodities are on fire. Beautiful shot of the Empire State Building here. But yeah, it's an interesting situation that these last 12 years have created, right? My view is that monetary policy was too restrictive for too long, and now you have so much wealth, you have so much essentially dry powder on the sidelines, right, that needs to be put to work at some point. And that doesn't mean that it's necessarily just going to go into equities. You know, this could go into, you know, actually real R&D for startups. So you never know. This could quite potentially be the start, not, you know, just the end that many people think. Many people think this is a final blow off top of the market. This could be inning one of a super cycle. It's very possible. Very seldom do you have these massive blow off top rallies after a 2-year bear market when growth stocks in general went down 70 to 90%. It just doesn't happen. So this could be inning one. And the reason why I say that is because the vast majority of people are not expecting that at all. They think that this is the tail end. So thinking a little bit contrarian, but also think about all the new innovation with AI, machine learning, robotics. That could create a productivity boom in the US in a way that nobody would ever expect. You can see everybody getting off the Long Island Railroad, headed back to the city for work in the morning. Greg says, do you think that bridge collapse is going to cause some serious issues for the cost of goods? I think maybe. Now, I'm not an expert in this, but I'm not a logistics guy. I'm not really a supply chain guy, but I was reading some pretty compelling posts on X from some people that are really in tune with the automotive industry, and they're saying it could have a significant impact. Now, if anybody here is in the automotive industry, and feel free to chime in, but I mean, the one thing I'll say is it can't help. This horrible tragedy, this bridge collapse, it's not going to help. Let's just say that. So, headed towards the Hudson Yards now. Yeah, TCAL says no as long as they clear that channel. I mean, what's the update on that? I read one article in the Wall Street Journal that says it's going to take 10 years to reconstruct that bridge. I find that a little hard to believe. I mean, what are your thoughts on that? Again, I don't have any engineering expertise, but this is 2024. I mean, if we can put a Neuralink chip in someone's brain and have them play chess just by thinking about their pieces on the move, I think we can construct a bridge in less than 10 years. I think that's a little bit ridiculous. That sounds a little bit like federal waste to me, because didn't the Biden administration come out here and say that the federal government's going to pay for this to reconstruct the bridge? But if it's going to take 10 years, I mean, think about all those long elongated costs. So I don't know the answer to that. Western Mass Dave says North Fork, Virginia has a huge port that could probably accommodate Baltimore's volume. Also New York, right? Joel PM says Fed needs to raise bank reserve requirements, still near zero, which is a huge lingering risk. Yeah, we could have a whole stream about that. You know, the infrastructure in the US in general is kind of crumbling, not gonna lie. Because that's because a lot of our infrastructure is pretty old. I mean, if you've ever been in the New York City subway, yes, I think it's a generally efficient, subway system to get you anywhere you need to go, but the subways are kind of deteriorating in a major way. Yeah, Fahim says move heaven and earth is what Biden said. 10 years surprised me too. Again, not an engineer, not a construction guy, but 10 years to build a bridge does seem a little bit long. But everybody, I want to wish you all a very happy Easter, whatever's left of it. Thank you all for subscribing to the channel. We just recently passed 45,000 people, which is just absolutely mind-boggling and crazy. So I really do appreciate everybody who joins the streams, participates. I have a really good time doing it, and I think you guys are really good people. So thank you for watching, thank you for subscribing, and I'm wishing you all the best. Have a fantastic start of Q2. April 1st is tomorrow. There's a lot to talk about. I will see you all tomorrow. Again, if you want to subscribe to our free investing newsletter, you could do so by scanning the QR code on your screen and just punching in your email. So everybody, that's it for now. Signing off from New York City. All Wise Owl, all of our moderators, Susanna Q4, Adventurer, Stan, I appreciate it, Gypsum 13, Theo, all of our moderators. Always a bull market somewhere. You just need to know where to look. Have a good Q2. I'll see you back here tomorrow. Take care.